For more on the MPC meeting and the parameters, Chief Executive Officer, Financial Derivatives Company, Mr. Bismarck joins us on the news at 10. Thank you for joining us.
Thank you for having me.
All right. How is the MPC meeting today different from all the others?
It's different in the sense that this was very introspective. In other words, if you look at it from a purely economic standpoint, the difficult choices were there. But when you look at it from the broad view of saying political, security, and economic, then you see, like what we say in the States, the central bank was between a rock and a hard place. So they went into deep introspection. They are dealing with inflation, dealing with unemployment, and dealing with parameters. But the important thing is that 24 meetings, in 24 meetings, 21 times, they've had a ritual of no change. But this time, 33% of the people voted for an increase in rates, and 66% voted for keeping it, maintaining hold. Therefore, there must have been a deep debate, and they must have discussed this in great detail.
Nigeria is recording high levels of inflation. I mean, how is this affecting our economy? How is it hurting the common
Inflation
Nigerian?
is a thief of value, and there's no question about it. And it's not a single factor driver. Okay, so, and what we've heard in the past is that inflation above 12% is growth retarding. Inflation above 9%, which is the central bank higher limit, is also a problem. Now we are at 17.3. We have almost the second highest rate of inflation in sub-Saharan Africa, as it were. Now, what does this mean? It means that you have to do something about the interest rate structure you have. The central bank is actually dealing with both the unorthodox and orthodox method. So in other words, what you are going to see is that you have inflation at 17.3% and you have treasury rates at about 2-3%. But recently, you started seeing a creep up in interest rates. But that gap has to narrow because high inflation and low interest rates means that people will not save. And if they don't save, they can't invest. And if they don't invest, you not create jobs. So you're now left with the dilemma of high unemployment and high inflation. So in economics, we call it the Phillips curve, where you trade off one for the other. Now, there's no time for trade-off. You have to pick one, deal with it before you sequentially. That's what's happening right now.
But one would ask, when you have, high numbers in inflation and then unemployment, what does this really amount to?
It means that really, like I said, you have to understand what are the drivers of inflation. Because now you cannot trade off. You have to deal with one before the other one. When you look at inflation, what are the causes of inflation in Nigeria? 1, exchange rate pass-through. 2, logistics and the price of petrol, diesel, and there's a correlation between that and prices. Then you have tariffs, and then you also have seasonality, and then you have security. So when you deal with these 5 variables, as you can see in that graph, you now begin to understand that you have to deal with it with a cocktail of measures. But most important is that you must do something about your rates of interest, because once the propensity to save increases, people consume less, and then it helps to bring down inflation. So we think that inflation will moderate towards the end of the year or maybe next year. But right now, our projection is that inflation, even next month, will go as high as 17.8%.
Just before we come to the short and long-term impact, you've done a consumer poll, which is quite a telltale.
Yes.
What does it mean, and how did you arrive at this?
Well, we talked to consumers, and the first thing was that Nigerian consumers said they were all exhausted. They're tired. And 65% of them said they're tired of promises. 25% of them said they're tired of lame excuses and stories. And 10% say, I really don't care. I'm out of here. So it tells you that there's a trust deficit. That is not to say that policies are not working. The policies are working, but the results are very slow in coming, and people are exhausted. So something has to happen in a hurry, because people, the trust deficit becomes a major problem for government. And that is why maybe the central bank is taking this balanced view. So whilst we would deal with the economics of it, we have to take care of this security and the other political considerations.
So looking at the impact of all of this on families, looking at commodities and their prices, what are we seeing?
Well, we looked at 10 products. Luckily, 5 of them, the prices went up, and 5 of them, the prices came down. The ones that went up are yams, gari, beans, and the flour is up, and also chicken up. But the ones that came down, quite interestingly, is onions, pepper, and we have cement, we have rice and tomatoes. So 50-50. But that's mainly food. There's the condiments, there's the food, and then there's the protein and all of that. But generally speaking, food inflation is a problem for Nigerians. And on Easter, as we go into Easter, the price of flour goes up to 15,000 naira a bag. It was 8,500 a bag 2 years ago. And then you are going to deal with cost-reflective tariffs. You're going to deal with price of petrol. Luckily, the price of oil, Brent oil, came down to $60 a barrel. So we might not be seeing that sharp increase in the price of petrol, but definitely there has to be some adjustment of some sort. So the question is Nigeria alone in this? No. We looked at 8 countries in all. And all of these countries, only one country, right, had inflation. In fact, all of them had inflation increase. Nigeria, Angola, Kenya, South Africa, Ghana. But of these countries, 3 only have their inflation rate higher than their treasury bill rates, and that is Nigeria, Angola, and Zambia. And those countries are actually struggling. So the thing is that what is going to happen to Nigerians on Easter weekend? They're going to be seeing that the price of oil probably be at about $60 a barrel. The next OPEC meeting is on April 1. The external reserves have been managed quite adequately. It's at about $34 billion. The power market is trading flat at about 475 to 480. And inflation in March is projected, for March inflation is projected to be 17.8. Long term, the refineries, Dangote refinery is going to come up. We don't know about the other refineries. The stock market is struggling. And more than anything else, the MPC is unlikely to tighten until maybe the next meeting or the meeting after that. So cautiously optimistic that things will get better, but it's going to be a big struggle in Q1 and Q2. Hopefully, 2 million or 4 million Nigerians will have been vaccinated by that time.
We appreciate your time. CEO of Financial Derivatives Company, Mr. Bismarck Rwani. Always a pleasure. Thank you for joining us on the News at 10.